This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. It is a definitely very busy Wednesday, and you are listening and watching Bloomberg Businessweek Daily. He's back.
I'm back.
Great stuff.
Oh, thank you. It was the Boca event was pretty amazing.
It was.
Continues today, and yeah.
High level in terms of exchanges, prediction markets. It was amazing.
It's described as like the plumbers of the market, right? It's the infrastructure. It's the ones who do settlement. And there's this transition happening with tokenization, with digitization.
Yeah.
The move to 24/7. In prediction markets, it just dominated.
If you missed any of it, check out the panel, check out Tim's interviews. But I love the panel and gambling, not gambling. Feel like folks, kind of staking out their territories. It was pretty interesting.
Yeah, Supreme Court will perhaps have a word to say about this.
Yeah, and regulators too, perhaps.
Oh, yeah.
Just to say. All right, as for the trade on this Wednesday, March 11th, 2026, yes, happy hump day, everybody. You've got U.S. stocks. They are lower across the board. And I'm taking a look at WTI crude bouncing around here. But we're seeing, more than 5% higher in WTI crude. Lots of headlines, Tim, that continue to come at us. You missed a lot of headlines yesterday.
Yeah, I was following along as best I could. Brent higher too today by 4.3%, above $92 a barrel. Still, Carol, both of those on the year up more than 50%.
All right, we've got U.S. stocks down, as we mentioned. U.S. Treasury rates are up. Tim talked about Brent. We talked about WTI crude. This hour, ahead in the next 60 minutes, we're going to get the latest on global energy markets and the U.S. economy off of a pre-U.S. war in Iran inflation print. Like, do we just say, we don't care, or is there something in it that is worth noting? Plus,
BNY Chief Investment Officer Jason Granet is back with us on what matters to investors amid war, the AI spend, and of course, the woes in private credit.
Yeah, it's something we're going to get into, too, in our 3 o'clock hour. Gary Evans also with us. He's chairman and CEO of United States Antimony Corporation on a deal with the Pentagon and just kind of building up the U.S. stockpiles when it comes to critical minerals and materials. So we'll talk about that.
This stuff goes in a lot of stuff that the Pentagon uses.
Absolutely.
So
big time defense.
What happens if the stockpiles go down? What's he hearing from companies that need this material? Maybe he can offer some sort of view on what it takes to rebuild those stockpiles.
And curious about as President China gets ready to go to China to talk to President Xi, who they have a lot of stuff there. I do wonder about what conversations they'll have around that.
Well, speaking of the war, Iran's cheap, plentiful weaponry puts U.S. military under strain. We're going to touch that a little later in the hour.
All right, let's get to that trade on this Wednesday. Here is Charlie Pellet.
Hi, thank you very much. Here's what's going on. Stocks lower across the board. Got to begin with what is happening with crude. West Texas Intermediate up 5.3% right now, 87.83 a barrel. Brent also up by 5%, 92.17. This is equities decline. The Dow, the S&P, NASDAQ, all in the red. S&P down 20. Drop right now of 0.3%. Dow Industrials down 370. A decline there of 0.8%, while the NASDAQ Composite Index is down 31. Drop there of 0.1%. The VIX continues to hold just above 25 with a 10-year at 4.20%. Gold down 0.4%, 51.70 the ounce. International Energy Agency this morning agreeing to discharge 400 million barrels from emergency oil reserves. Investors, however, not convinced that it will have the desired effect. We'll have a whole lot more with our Will Kubzansky coming up in just a moment right here on Bloomberg Businessweek Daily. So again, the Dow, the S&P, NASDAQ, all in the red. West Texas Intermediate crude up 5.3%, 87.90 for a barrel of WTI. Goldman Sachs and Citigroup have told staffers in Dubai to stay away from their offices as Iran's attacks on Gulf cities continue. Sources say Goldman has instructed employees to seek permission before going into its offices across the Middle East. Goldman shares down 1.6%. Citigroup right now down by 0.6%. Again, recapping, stocks lower. West Texas Intermediate crude up by 5.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, everybody. A lot coming at us, as you know. I do want to mention, though, something this morning. Axios out on social. We've also heard from President Trump. We'll hear some comments from him a little bit later on this hour. But he did say say to Axios in a brief phone interview that the war with Iran will end soon because there is practically nothing left to target. Here's what he said: little this and that. Anytime I want to end it, it will end. Again, it was about a 5-minute call. So there's that going on, but we continue to get comments from him.
Yeah, we do. And remember, if you have a Bloomberg terminal, always check the T-Live blog for the latest on this. Their team is just running this incredible blog that continues to update. The president said the U.S. could strike more targets while downplaying mine risks. Oil, as we've been talking about, continued to climb as the IEA move is seen as a temporary fix. Banks evacuate staff in Dubai after Iran says it will target financial firms.
Yeah, so there's so much going on. So we wanted to talk a little bit more about the energy markets. Tim and I at the top telling you about the move up in both Brent and WTI. Bloomberg News refined products reporter Will Kubzansky is with us right here in our New York office. Will, we know why oil has been moving so violently. It's on the headlines. We're trying to understand. We've seen it go as high as almost $120 a barrel. We've backed off of that. Talk to us about kind of the bigger picture. We know what's going on in the Middle East, but is there something that is going to be perhaps even a longer term impact at this point?
Yeah, it's a great question. I think ultimately, like everyone else, oil traders, refined products traders are looking to what's happening in the Strait of Hormuz and just trying to figure out how long flows are going to be backed up. But the other question that begins to emerge is, what happens to storage? What happens to oil fields that maybe need to be shut in if you're not producing enough oil? Refineries are the types of infrastructure that you need to be running at all times. You can't just turn it off. So there's a lot of questions here downstream on infrastructure that suddenly get a lot more complicated as this continues going forward.
Will, how does this move into not just gas prices, but throughout the supply chain? Because when we think about oil as an input, it really touches everything. And I can look at the Bloomberg and see the daily national average gasoline prices from AAA. At the end of last year, it was $2.83 a gallon. Now $3.58 a gallon. So we know what it does to gas prices, but what about to other parts of the economy?
Yeah, the thing I would point to first and foremost here is diesel.
Okay.
Diesel prices have increased more than gasoline prices
Wow.
pretty significantly. We're up, I think, in the 470s. If we get to $5 a gallon, that would be the first time since 2022. We're still a ways away from that, but diesel is a really important input for the entire economy. It's not just, trucks that run diesel pickups. It's freight. It is shipping. It is things like agriculture and construction. Suddenly, this is an input into, almost everything you can think of in the economy that's getting more expensive.
One thing, Will, just to wrap up here, I always think about, demand destruction, right? And you mentioned refiners, beginning to balk at those high premiums on available oil barrels. So they're threatening to slow down the flow of the world's most traded commodity as we continue to see this war in the Middle East. I mean, there is a point where things get a little bit pricey for refiners, perhaps, in terms of refining, because they don't quite know what happens next. We continue to talk about the big unknown with this war is how long it goes on.
Yeah, I think for refiners in particular, you're sort of looking at a situation where you need to run the refinery. Turning it off and turning it back on again, for lack of a better phrase, is a really challenging and lengthy process. So I think we're not going to see a situation where refiners shut down and stop buying crude altogether. You might see lighter runs on crude being turned into products. You might see sort of like limitations here and there. But I think demand destruction for refiners in particular is a pretty high bar.
All right, good stuff. A good check as we continue to see headlines certainly impacting the energy markets, global energy markets. Will, thank you so much. Will Kubzansky, he's Bloomberg News refined products reporter.
That's just so Bloomberg, right? He covers gasoline, diesel, jet fuel, refined products. But
those are big
that's
markets.
so important. It's so important.
Yeah.
Yeah, I love
it's kind
it.
of the industrial space,
It's
right?
what we need to know. These are the inputs.
Yeah, exactly. And those of us on the consumer side are thinking about, filling up at the pump and what that means. It kind of speaks to, we did get an inflation print earlier today, an underlying U.S. inflation, Tim, slowing in the month of February from a month earlier. It did offer some relief from price pressures before the war with Iran.
Lower prices for used cars, motor vehicle insurance, that helped keep inflation in check, despite higher costs for gasoline and groceries, including fresh vegetables and coffee. That was, though, before the war.
Which is something we talked about on our planning call. It's like, who cares?
Yeah, who cares?
But I keep thinking, though, if we had higher inflation before the war, that shows that inflation is still persistent here in the U.S. So let's see what Yelena Shulyatyeva has to say. She's senior U.S. economist at the Conference Board. She's here in studio. Good to have you here. Old Bloomberg colleague, so fun to have you back here, even as a guest.
So excited to be here.
So good to have you. So is it, I don't know, old data, do we dismiss it? But does it remind us that inflation continues to persist here in the U.S.?
One thing I was looking at right away is the pass-through of tariffs into core goods inflation. And it was there. And it was there at an accelerating pace for certain things like furniture and apparel and other things that where tariffs actually have an impact.
Why now, though?
It keeps coming through into consumer prices. So
I thought that was a one-time hit.
Well,
really,
apparently not.
A lot of economists said that. A lot of economists said that.
So yeah, and we continue to see that impact, and probably we will continue to see that on top of everything else that is going on with oil prices, gasoline, and diesel.
All right, so I don't know. Do we start to look ahead to maybe the Friday, tomorrow print when it comes to PCE, which is certainly the Fed's preferred, right, inflation gauge? It is Friday the 13th. No, that's not. Wait.
This Friday is Friday the 13th.
It is.
Tomorrow's Thursday.
Tomorrow's Thursday, yeah. You wish.
Sorry.
Carol.
It's been a bit of a week. But it is Friday the 13th. So is that like a bad omen in terms of what we might see?
So there's a huge disconnect between...
I know.
Carol,
anything could happen. Pull out your crystal ball there, Stenovec.
Okay, so PCE and CPI prices have seen a huge disconnect. And part of that is shelter prices, which has been affected by the government shutdown and how artificially they are lower than they have to be at this point. But yeah, PCE prices are going to accelerate on the back of this supply shock, the oil prices shock, and we will continue to see that. So this is the data that the Fed is looking at for which reason they will probably stay on hold.
But as we talked about a lot in 2022, the Fed can only do so much when it comes to the price of oil. And that's not, and by do so much, I mean nothing.
They can't actually produce it or help this out.
So the way we look at it is which way this shock will affect more. Is it going to affect prices more than production, than GDP output? So for now, if the crisis is a little bit short-lived, it will affect prices to a larger extent. So inflation will rise by 0.3%, we estimate, on the back of this crisis. GDP growth will probably be lower by 0.1%, according to our estimate, but a lot depends on the duration. And we continue to say that it really depends on how long it lasts.
Do you worry at all about stagflation? We got the jobs print, and I know unemployment, people remind me, still fairly low. And I know we still have growth in the U.S. economy, but is it crazy, to bring up stagflation? I know we have tax cuts. Everybody talks about stimulus.
Stagflation is definitely in the air. So,
it is.
Yeah. I mean, it's far from, a full-blown stagflation for sure that we experienced earlier in the 20th century. It has to be shown in inflation expectations. Unless inflation expectations surge, we're not going to see a full-blown stagflation, but a little bit of a sense of that is definitely there. As
Carol alluded to earlier, the president has said the war is very close to being over. Iran is pretty much obliterated. Not exactly his words, but that was what he was implying.
The risks are still there.
Why?
Right? Yeah. Are you going to go there and pass the Strait of Hormuz if you know that things are not really great yet? I don't know. Insurance will probably still be high, and that shock that we already had will pass through into consumer prices.
Goes on longer, it's a problem, right?
Yeah, definitely.
All right. Yelena, thank you so much.
My pleasure.
Come back soon.
So good to be here.
Great to have you here. Yelena Shulyatyeva, she's senior U.S. economist at the Conference Board, and we're going to kind of stay on this. And I think what's interesting, Tim, and this is something that was what we were trying to continue to get our heads around since this war started, is what's the mission, what's the timeline? And sometimes when you are hearing contradictory things from the defense secretary versus the president in terms of going to wrap it up soon, could wrap it up soon, wait, could keep going. We had, again, another crazy day, where we are attacking sites in Iran.
I think that's why the markets are such a good metric for this, because, and the president certainly, as we saw the last couple of days, the president really does move markets with his comments, especially with regard to oil. But then you see it creep back up as a result of, wait a second, it doesn't seem like it's wrapping up.
Yeah, exactly. So let's see what our next guest has to say. It's great to have back with us Jason Granet, Chief Investment Officer of BNY. Good to have you here in our studio. How are you?
I'm doing great, Carol. Great to see you, Tim. Welcome back.
Thanks, Jason.
I've been called a lot of things. So. I'll take that one. I'll take that one.
Janice, or I don't know. Jason Granet.
Yes.
How do you make sense of this year? It's only March.
The year or the last 12 days?
Yeah.
Which one?
The last 12 days kind of, I think, for a lot of people feels like a year.
Yeah, I think,
you look at the
I think
moves,
each day or week feels like a year.
Yeah.
Do you separate them out in terms of the last, since the U.S. war in Iran?
Yeah, look, I mean, if you think about where we were heading into the end of February when the conflict started or escalated, we were in a situation with economic data where the focus was on the labor market, clearly weak. You saw that with the backward look data that came last Friday. You had people believing that inflation was probably needed another leg down before it got a move, and that wasn't happening. And I think today's report showed you, and we just heard from the last guest, that there's some things happening under with some tariff pass-through and things that people were wondering if they were going to happen. And so we were having a sideways trend in rates. And all this is done, obviously, you guys were just talking about the energy supply shock, and that's a really tough thing for a central bank to deal with.
Yeah, and I think because there's so much uncertainty about what the duration of this will be, that's why we've seen such big moves. How do you plan for something like that when you're thinking about investing, when you're making recommendations for what to buy? Is that something you ignore, or is it something that you actually are taking into account?
Yeah, a couple things there. There's two durations. One, there's the duration of how this period of war lasts. Yeah. Right? So, that might end soon, it might not. The second is the duration of how long the supply shock could last for. If they turn certain energy development off, it might take a long time to turn it back on. You have the straits open. Are we going to flow at however many vessels per day as we were before? Probably not. There's probably going to be some ramp up period.
We've heard that about, was it aluminum smelter when we were at Bloomberg Invest, it's being shut down in the Middle East, and that's going to take 7-8 months to restart.
Yeah, so the question, there's a couple durations to think about. When you talk about investing, I think a lot about the size of investment matters, right? You want to make sure you're sized to absorb wide range of outcomes. We believed coming into this year that there was a lot of really good pricing in the market and a lot of headlines that might not have matched the really good pricing. Yeah. We have a group at the BNY Institute where we talk about and banty about different topics, and we all kind of collectively saw that maybe the headlines didn't match the pricing, and so therefore it might make sense to make sure you're sizing appropriately.
When you guys get together, what do you most talk about? And I think about actually a conversation we had with Leanne Russell, Chief Information Officer at BNY at our Bloomberg Invest, and she talked about AI and digital employees. We were kind of blown away by the conversation of what you guys are doing. What's top of mind?
Yeah, so we have a lot of cool stuff going on with that. I'll let Leanne talk about what's going on here.
When you think about it,
but when we talk about it on the investment side, there's a lot of different lenses, right? You have significant CapEx. That's been a huge tailwind for the economy in a lot of different ways. Look at the size of these bond deals that are coming out. This is a lot of money that's recycling back on the investment side.
You're comfortable. They're the big tech that are largely doing this. You're comfortable with that?
Well, I personally, in our portfolio that I run, don't invest in corporate debt. Yeah. But we do think a lot about what that means for the overall investment, it's under the shelves of things that are available and what's out there. But from an economic macro perspective, it's very supportive of economic activity.
10 seconds. Glass half full, glass half empty when it comes to the investment environment.
I'm taking a drink. It's about right in the middle. I do think it's right in the middle.
You could have called him Eliza, which is the chatbot's name. At BNY.
Well done. Good memory.
Well played, Tim. Well played.
Jason Granet, thank you so much. Chief Investment Officer at BNY. When we come back, the CEO of United States Antimony Corporation on the build-out of critical minerals. We're coming back. It's a busy Wednesday. Stay with us.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red as oil continues to advance. West Texas Intermediate crude up 5.1%, $87.65 a barrel. Brent just above $92 a barrel, up now by 4.9%. The International Energy Agency today agreed to discharge 400 million barrels of oil from emergency oil reserves. Investors, though, not convinced this will have the desired effect. Stocks in the red. S&P down 19 at 67.62, down 0.3. Dow Industrials down 336 now, drop there of 0.7. NASDAQ down 42 for the NASDAQ Composite Index, a drop now of 0.2%. The VIX holding above 25 with a 10-year at 4.20%. Gold down 0.3, 51.75 the ounce. And again, West Texas Intermediate crude up now by 5.5% to $88 a barrel. Goldman Sachs and Citigroup are telling staffers in Dubai to stay away from their offices as Iran's attacks on Gulf cities continue. Shares of Goldman Sachs down 1.7%. Citigroup down now by 0.6%. A source tells Bloomberg Stryker Corp was hacked in an attack that has crippled the company's global operations. A pro-Iranian digital activist group is claiming credit for the incident, potentially marking the first known major cyber disruption of an American organization since the joint U.S.-Israeli strikes against Iran. Shares of Stryker down now by 3.7%. Recapping stocks lower, S&P down 0.3%. We've got West Texas Intermediate crude oil trading higher by 5.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters in New York City. Well, this morning our next guest was downtown in the heart of the U.S. financial district. He was ringing the opening bell at the New York Stock Exchange. He was there to mark the company's listing on the exchange. And this is a company that has really been at the center of, I think it's safe to say, one of the Trump administration's main initiatives when it comes to national security, and that is the build out of crucial minerals and materials.
Yeah, we got with us Gary Evans. He's chairman and CEO of United States Antimony Corporation. It's a $1.4 billion market cap miner, producer, and seller of antimony products. It's based in Montana. The stock up more than 100% so far this year. Carol, 183% increase just last year.
And we do note that about 22% of the float is short. So investors keep an ае on this one. Gary, so good to have you back with us in studio.
Thank you for having me back in so quickly.
I know we talked to you last month about a deal that you were doing, and we talked about kind of the build out here in the U.S. And I was just thinking
a lot has changed since then.
It was Paul Hewitt, right?
We were the America's Gold and Silver. Paul Hewitt,
and the two of you guys working together. Where are you guys in terms of the build out, and certainly the deals with the government? And I also think about here we now have the backdrop of the U.S. war in Iran, and probably pressure, something we're going to talk about later in terms of the military stockpiles here in the U.S.
So with respect to the America's Gold and Silver joint venture, we fortunately already have the land, we already have the permits, which puts us several years ahead. We're doing engineering and construction plans now. We'll start probably in the next 60 days. So we hope to have that plant up and running by this time or summer next year.
This time or summer next year?
Yeah, so March to June.
Yeah.
Okay. So it's a little while to get online.
Yeah, well, it just takes a year to build the construction. Okay. We're talking about a $75 million project. It's not a little rinky-dink addition.
I wonder about the conversations you continue to have with the U.S. government, and especially, again, going back to this backdrop. Are you guys constantly talking? Are they talking about where are you? What does this mean in terms of U.S. national security? Because I do feel like we are increasingly having conversations, and even this week and over the last week and a half when it comes to what we're seeing in the energy markets, that even nations around the world are now thinking about, okay, what do we need to be energy efficient? So pick your critical commodity or resource that nations around the world are thinking about this.
Well, so two things have happened since I was here a month ago. Last week, we won a $27 million grant from the Department of War. We've been working on that for about 6 months. The purpose of that money is to reimburse us $20 million plus or minus for our facility in Thompson Falls, which we've been expanding since May. It goes live in 2 to 3 weeks. The other $7 million is for our operations up in Alaska. We have got antimony exploration going on there. So that was what that money is for. And then the week before, we announced a new resource report on another critical mineral that's very vital to the government called tungsten.
Yeah.
And tungsten's the second hardest mineral behind diamonds, and it's used for submarines and tanks, for shields. And we bought a property in Canada, Sudbury area, last May, and did enough work to be able to get what's called a third-party resource report that you can file with the SEC, and it shows $4.6 billion with a B of future revenues from that property. So we are on a fast track to get that up in operation. We hope to have it done this year.
Should investors expect more grants to come down the pipe?
I sure hope so, because we have a $45 million grant request in the Department of Energy today.
Okay.
We're doing a $75 million grant to the Department of War in 10 days. We're doing another $15 million grant to the Title III for our tungsten flake.
As CEO of the company, you have to plan for what revenue or money you will actually get when you plan these projects. What is your expectation that you will get those grants?
Actually, we run our company as if we're not going to get anything.
You do.
So you can't guarantee
the base case is
right.
we're not getting any money.
We're not getting any money. I think what the government wants us to do is move faster, which is what the money really does. Because I have to go raise capital, I have to do lots of things to fund it myself.
Right.
If the government jumpstarts me, I can move 5 times faster than I would with my own money.
So Carol asked about discussions with the Pentagon.
Yeah.
What about just discussions with other parts of the U.S. government?
You guys are talking with the energy.
Yeah. Like, do you have a lobbyist in Washington? Do you have somebody full time for the company in Washington? How do those discussions work?
I hired a guy full time in D.C. About 2.5 months ago. He helped me get this final $27 million done. He's the one that filed the DOE grant for $45 million. He is constantly looking. There's buckets of money in the government and all kinds of places that we don't know. And so we're trying to find out what they are. They don't necessarily communicate with one another. So it's a process. And then there's a system. I actually hired a former Department of War doctor who's helping us write the white paper. She knows what they're looking for.
Yeah.
So we're using all the tools we have available. As you know, General Jack King's on our board. He's given us some guidance. So I was spent last Thursday all day with Donald Trump Jr. in Dallas. We're doing everything we can to try to grease the skids so they know that we really are trying to help the country.
Gary, safe to say, and it's only been like a month since we talked last, that the pressure, I think you've already kind of mentioned this, that there is more pressure from the government to kind of get all this stuff up and running.
All you can do is listen to the news. When the news is saying we're running out of artillery, that's not something you really want to announce to the world.
Well, can you give us some clarity around that? Because I think we're trying to understand, is there pressure on U.S. military in terms of the build back? And I'm just wondering, now that we're in our second week of this conflict with Iran, is it causing stress on antimony or other critical mineral shipments? What are you seeing, and what can you tell us around that?
Well, we know there's a stockpile.
Okay.
And our job is really to build that stockpile further. But it's not just the United States. It's NATO countries. It's Australia.
Right.
So we're trying to figure out ways that we can put, like the Hydromet facility with America's Gold and Silver, that's a different technology that we can take subpar antimony and make munitions grade material.
What's a munition, just for example purposes right now? What's a munition that includes antimony that's used in this war?
So what we'd make is a metal. It's a 50-pound ingot. It's serial stamped, put on a pallet, shrink wrapped, and shipped to the Department of War. They give that to Northland, Boeing, GM, whoever is making products that needs antimony.
So how long from when you send that shipment, that 50-pound shipment, does it end up in a munition that can be used in a war?
Within days.
That's how quickly they can produce it?
Well, no, they take that ingot and they'll distribute it to their subcontractors of the military.
But what I'm trying to understand,
all they do is melt it down.
But I'm trying to understand how long it takes the subcontractors to build those weapons.
I got no idea.
We got to call Northrop on that one.
Yeah.
But I mean, we've asked Wayne too.
Yeah.
It's like there's not a lot of clarity there.
And remember, World War II, we shut down all the auto factories and started making tanks and planes and trains and automobiles. So
we are not there right now.
No, we're not there.
Listen,
and our goal is to try to be sure the government has these critical minerals in its fuselage. That's what they need.
I just have to say, I have a grandmother who was a Rosie the Riveter. So like she was at a GM plant. But the stress on antimony supplies now, are we seeing a drawdown here?
They don't tell me. But I can tell you their orders continue to increase.
Okay.
So as of right now, to fulfill the Department of War's orders for 2026, it's $85 million of orders I have.
Okay. So Okay.
What does that compare to a year ago?
Zero.
Yeah. So it's pretty aggressive. Yeah. Hey, we were thinking about when you were coming in and our planning meeting about President Trump's upcoming meeting with President Xi. The export controls remain kind of an issue between these two countries when it comes to these critical minerals and materials. Have you seen any indication that China is about to kind of loosen their export restrictions? You're shaking your head, of rare earth elements and permanent magnets in particular?
There's a difference between the rare earths and critical minerals.
Right.
When Trump met in South Korea,
and I know we always do this when
people get them confused, and it's understandable. Trump came out of that with a 1-year reprieve on rare earths. He actually said critical minerals. The prime minister or the Ministry of China the next day said no critical minerals. So when tungsten and antimony were stopped, that was September of 24. That's before Trump was in office. That was during the Biden administration. Why did that happen? The largest antimony mine in the world, called Twinkle Star in China, depleted. 125-year-old mine, the largest in the world, done. Wow. So China has been, every day that I'm in the market trying to buy antimony, my only competitor is the People's Republic of China. And they're out there throwing money, roads, bridges, whatever they have to do to get that country to sell them antimony. And so I am their competitor in the market.
So what do you want President Trump to do?
We need floors. I mean, we're dealing with a gorilla that can drive the price down and lose money.
Yeah.
And we're talking about the country of China. So we need price floors to protect the industry.
Geographically, how is it distributed around the world?
As far as antimony, it's typically found with gold. We're currently receiving antimony from the country of Chad, Bolivia, Peru, Chile, Australia, Mexico. Now, every time you look at those antimony deposits in those countries, different grade, it may have arsenic, it may have sulfur, it may have lead. We have to deal with that in our smelters. So we prefer clean antimony.
Do you see anything, we go from administration to administration, and, China is a nation that's got these long-term plans, right? And they, as you said.
100-year plan.
Right, exactly. Very different. Just got about 30 seconds. Do you believe that what we are seeing now in these domestic builds of critical precious metals, rare earths, like all this stuff, that it will continue no matter who's next?
It's a wake-up call. We've been sitting behind the log for 20 years watching this happen, and all of a sudden it happened. And so it's a huge wake-up call, and this industry has the capability of meeting these needs. We need time and we need money, but it can be done.
All right. You are such a gem for always finding time for us and coming back, and you educate us along the way. So we so appreciate it.
You're welcome.
Congratulations on the listing as well.
Thank you so much.
Gary Evans, he's chairman and CEO of United States Antimony Corporation, right here in studio. When we come back, kind of continue the conversation, right? Yeah,
Iran's cheap, plentiful weaponry putting the U.S. military under strain. That's next on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board as the International Energy Agency agrees to discharge 400 million barrels of oil from emergency reserves, but investors not convinced this will have the desired effect. We've got West Texas Intermediate crude up 4.9%, 87.47 a barrel. Brent, the global benchmark, up 5%, 92.18 on Brent. Right now, the S&P is down 20, down 0.3%. Dow Industrials off session lows, down 370, down 0.8%, while NASDAQ is down 33. For the NASDAQ Composite Index, down by 0.1%. The VIX just under 25 now. We've got the 10-year at 4.20%. Gold down 0.3%, 51.77 the ounce. And again, West Texas Intermediate crude up 4.9%, 87.53 a barrel. Goldman Sachs and Citigroup have told staffers in Dubai to stay away from their offices as Iran's attacks on Gulf cities continue. Shares of Goldman Sachs down 1.6%, Citigroup lower by 0.5%. A source tells Bloomberg JP Morgan Chase is restricting some lending to private credit funds after marking down the value of certain loans in their portfolios. And Ripple has kicked off a share buyback that would value the company at $50 billion, cementing it as one of the most valuable digital asset firms, a moment of uncertainty for the cryptocurrency sector. Recapping, S&P down 0.3%, WTI up 4.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we wanted to just bring up something out from ABC News. They are reporting that the FBI...
Just about an hour ago.
It is just about an hour ago, right? And I feel like, there's multiple outlets picking it up, but it did come from ABC. And they are out reporting, Tim, that the FBI warned police departments in California in recent days that Iran could retaliate for American attacks by launching drones at the West Coast. Again, this is according to an alert that was reviewed specifically by ABC News.
Yeah, look, if that were to take place, it would take this war to a new level. It speaks also to the questions that we've had since the U.S. war in Iran began more than a week and a half ago. Where we are, what's the mission, when it will end. President Trump addressing the U.S. war in Iran shortly after noon today, Wall Street time, from the White House as he was headed on a trip to Kentucky and to Ohio.
Right now, they've lost their Navy, they've lost their Air Force, they have no anti-aircraft apparatus at all, they have no radar, their leaders are gone, and we could do a lot worse to one another. We're leaving certain things that if we take them out, or we could take them out by this afternoon, in fact, within an hour, they literally would never be able to build that country back.
All right, that, of course, is President Trump earlier today at the White House en route to a rally in Kentucky. Meantime, according to today's Bloomberg Big Take, as the conflict, the U.S. war in Iran, extends toward a third week, the U.S. war effort is showing unexpected signs of strain against an adversary whose military budget is smaller than the GDP of Vermont. There's a little perspective for you, but which also has an arsenal, Tim, of missiles and drones unlike anything that the United States has ever faced.
With more, we've got a Bloomberg Global Defense editor, Gerry Doyle, joining us from London. Before we get started, what is the view from London on the U.S. war in Iran right now? I mean, and I don't want to have you speak for everybody who's there, but just how is it being portrayed, and what are you seeing?
I think that from the outset, really, there's been a lot of dismay and sort of confusion about the war aims of the U.S., sort of what the end goal, the desired end goal is, sort of why the U.S. is engaged in this, and sort of this sense that maybe the second and third order effects of a large-scale attack on Iran were not considered enough, certainly relative to the way they've affected the rest of the world, including Europe.
Yeah, well, I think it's fair to say a lot of those same questions being asked here, not just by reporters to the president, but also by observers near and far. So let's get to today's big take, because it's a story that we've been watching and talking about since the war began less than 2 weeks ago. That is the U.S. military stockpiles. It's the questions about the strains that we're seeing with the U.S. war effort. What are those, from weaponry to ships to our military members?
Well, I mean, first and most important, war puts a tremendous strain on the people who are involved in it. We've already seen, I think, 7 U.S. service members killed, reports that dozens or maybe more have been injured in strikes. I mean, look, even if you are not directly hit by a missile or a drone, being near an extremely large explosion it causes all kinds of trauma, to your inner ear, to your brain, and other things. So there's a human cost to this, and obviously on the Iranian side as well, many more people killed, civilians even. In terms of the strain on the actual war apparatus of the U.S., what we're seeing, and sort of the interesting aspect of this, is not that U.S. planes and weapons and ships aren't able to do very precisely the job that they're designed to, and in fact they have been performing nearly flawlessly in the tactical sense in terms of hitting what they want to hit and operating in a way that doesn't put any crews in danger. But the fact of Iran's arsenal, with its Navy gone, its Air Force gone, its air defenses sort of shredded, what you're left with is a whole bunch of ballistic missiles and a probably even larger number of drones. And that gives Iran the capability to continue striking, not just at U.S. forces, but at oil infrastructure and other things around the region, that it doesn't need all these other easily destroyed aspects of its military for. And so that confronts the U.S. with a problem that it really never had to deal with before.
What did we miscalculate as a nation, as a military, as security, as defense? Like, I just wonder, how did we kind of not maybe, or underestimate the capabilities in Iran?
I mean, I can't climb inside the head of anybody who planned these attacks or who authorized them or anything like that. I mean, just from an outside perspective, it seems that perhaps we may have misjudged Iran's sort of capability to strike back, or its will to either continue fighting despite all the things that have been thrown at it. Again, I think one of the big miscalculations might have been just forgetting about or not considering what would happen if the war lasted more than a couple of days, if the Strait of Hormuz did get shut down, what the impact on the global economy would be. And I think those things are really what we're coming to terms with right now.
What about the actual way that Iran has been fighting this war, and back to this idea that it could send drones to the west coast of the United States? Did the United States, and does the United States have a good idea of what Iran's capabilities are and continue to be even after 12 days of fighting?
Well, first of all, to the drone attack on the west coast, I have no idea how Iran would do that. The longest range drone they have would crash somewhere in the Middle East long before it ever got to the United States. They did say
it could be from some sort of ship. This is just the ABC News report that we're citing.
No, I understand. I don't see an Iranian ship sneaking up on the West Coast either. There's huge military bases all up and down the West Coast. There's U.S. planes flying, military planes flying Hawaii to California all the time. There's virtually no way a ship large enough to carry a massive drone strike force is going to sneak up on California. To the second point, though, I mean, Iran's sort of remaining card, and the thing that really makes it most dangerous is even if you took away the missiles and drones, they still have a large number of extremely cheap and easy to place naval mines. They have a large number of anti-ship missiles, which have been sort of appearing in the Gulf from day to day. I think 3 or 4 ships were reported hit today, commercial shipping. And more than that, even the way this war is being fought. So Iran, the Iranian regime, like, their only goal of this war is survival. That's it, to endure whatever punishment the U.S. and Israel mete out and just be standing at the end. Whereas the U.S. Sort of has these shifting war aims. It's going to eliminate the nuclear program. They're going to disable Iran's military, regime change, all of these things. And the fact that we don't know exactly what it's going to be makes it harder for the U.S. to emerge victorious.
Well, it's an incredible big take. So much detail. Costs of war, weapons costs. It's unbelievable. Gerry, thank you so much. Gerry Doyle joining us from London, Bloomberg News Global Defense Editor. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you're back here on Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec, live here at our Bloomberg headquarters in New York City. Just want to mention, and something we're going to be talking about in our 3 p.m. hour, and has to do with what's going on in private credit markets, because the headlines continue. Something we talked about yesterday, Cliffwater, and it is disclosing redemption figures in a letter to its investors. Cliffwater's $33 billion private credit fund, first quarter redemptions reaching 14%. So, yeah, just kind of watching that.
I'm also watching, you're watching that. I'm watching while that's happening. Yeah. What is happening in Ohio right now, where the president is participating in a site visit at Thermo Fisher Scientific. He's scheduled to talk about his efforts to lower prescription drug prices, but the president just making some comments. He said the U.S. on the war. He says the U.S. military is way ahead of schedule. This is him speaking at the Thermo Fisher Scientific plant in Ohio. The market is holding up well. Oil will be coming down. And the president also asking the Supreme Court to open Haitians to deportations. The president, a redhead crossing the Bloomberg terminal, will invoke emergency law for Sable as oil squeeze tightens. That's according to a person familiar with the plans for the oil company. Once again, a redhead crossing the Bloomberg. The president will invoke emergency law for Sable as the oil squeeze tightens. This according to a person familiar describing the president's plans for the oil company.
Yeah, I'm going to go to this, and I'm Googling this, folks, so bear with me. Trump administration considering, this was something I think ahead of it, using the 1950s Defense Production Act to override California state regulations and allow Sable Offshore to restart a damaged pipeline.
Yeah, Sable Offshore, SOCUS is the ticker. Its trading has been halted to volatility. Jen Delowy and Nathan Risser out with a story on the Bloomberg terminal. Right. President Trump is preparing to invoke, just like Carol said, Cold War-era powers to pave the way for renewed oil production off the Southern California coast. It's a long-shot bid to help ease the global crude supply crunch spurred by the war with Iran. He's set to soon summon authorities under the Defense Production Act to preempt state laws and ease permitting for Sable Offshore. It's a Houston-based company looking to restart significant production from a cluster of offshore platforms in California. That plan was described by a person familiar with the matter who asked not to be named because it's not yet public.
There was an emergency special permit. I think it was issued in December 2025. It bypasses standard safety review, state oversight. That prompted some lawsuits from environmental groups in the state of California. But nonetheless, when there's these emergency actions, there's a lot that can be pushed to the wayside.
I just will say from personal experience growing up in Southern California on the coast and very close to communities that dealt with the ramifications of offshore drilling, oil spills, communities that had been completely rebuilt from the ground up. It's going to be an uphill battle from a regulatory perspective to be able to pull off, I would imagine, something like this.
And as Tim, mentioned, shares of Sable Offshore, ticker is SOC, they are halted, a trading pause, no doubt about it, as this news has come across. So we will wait to see. I'm just looking at where the stock was just before the halt. Let me just pull it up, my GIP on the Bloomberg here, and it was up about 16%. Before the halt. So we will wait to see. But that would certainly be a massive impact for this company.
Yeah, the company has sought to resume significant production from platforms near the Santa Barbara coast, tapping hundreds of millions of barrels of crude deep below the seafloor. Its plans, though, have been stymied, as you mentioned, by regulators' opposition to reopening the so-called San Ynez complex of pipelines needed to funnel the crude onshore and then onto area refineries.
All right, so getting ready to do this. It doesn't sound like he's done it yet, but it sounds like he's certainly taking steps to do it. Again, we're going to keep a watch to see when the stock resumes trading here in the Wednesday session. In the meantime, I'm Carol Massar along with Tim Stenovec. Let's get to some stocks on the move. Bloomberg TV markets correspondent Norah Mulinda is in the house. Just got a couple of minutes, so take it away.
Yes. Looking at shares of Oracle, we see that stock is higher on the day, up as much as 15% for its best day since September of last year. We know the company reported strong sales, also an outlook that suggests continued demand for AI infrastructure. We were talking yesterday with Anurag Rana on Businessweek. He talked about OpenAI being in focus, IRR, and also funding is some of the things that investors will really be looking at as it relates to this company. He liked the quarter. He did.
He thought it was a strong quarter from the company.
Absolutely. Also looking at shares of Campbell on the downside earlier, tumbling as much as 9%. This is ticker CPB. Its worst day in nearly 6 years. Second worst performer in the S&P 500. This is after it cut its profit outlook to the lowest in a decade. They talk about the snacks division, seeing some declines, missing expectations. Consumers pulling back on both chips and pretzels, apparently. Also some supply chain constraints as it relates to fresh baked goods.
All right, can we stay with food and go with Papa John's?
Yes, looking at Papa John's, ticker PZZA, we are seeing this stock surging as much as 23%. This is after news that we did see that the company would actually be drawing some fresh takeover interest from a Qatari-based investment fund.
I saw that one, right? Big move here.
I thought that would be a good gainer for you, Carol, but you had already sent your gainers by the time I saw this.
You can still tweak. You never know.
And now I might have to tweak with Sable Offshore.
Yeah, you might have to. That's true.
there.
That's the way it works.
Option.
That's why I don't do them until 3:50.
Because if I don't, then Ramon's going to be honorable mentions. Massar, you missed a couple. Norah, thank you so much. Norah Mulinda, Bloomberg TV markets correspondent. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, or anywhere you get your podcasts.
All right, we mentioned the Sable offshore news. That is where we are going to start in just a few minutes when Ellen Wald joins us of Transversal Consulting on the oil market and more. That's next on Bloomberg Businessweek Daily.